Hello, yes, welcome everyone to the next class of financial modeling. In today's lecture, we will be looking at more models of finance based upon the financial statements of the company. So, what you need to do today, first type on internet Reliance Industries money control so that we are not wasting time in making the profit and loss account from the very beginning. So let us copy the profit and loss account from Reliance Industries and then we will be making certain calculations from that. So I'm clicking on the first link. Until the time this link is getting opened, we can open up the Excel file as well. So I am opening up the Excel file. Let us have a look at the website till the Excel file is getting open. So we need to scroll down and find financials here. So I'm scrolling down and here you can see that financials are written. So when you will look at the financial, here are the financial and on the right hand side, detailed financials are given to you. In detailed financials, click on profit and loss account. So when you will click on profit and loss account, you will be seeing profit and loss accounts of the Reliance Industries for the 5 years. So I will copy this profit and loss account in Excel and then we will make certain calculations in respect to it. So when you will copy it, make sure that you are copying it till the source. Source is need to be copied. What is the reason behind it? I will tell you after some time. But yes, Control C, Control V. Once you will copy and paste it, you can see that settings of the profit and loss accounts are not optimal. So on the top, you can see wrap text. The option of wrap text is there. So click on wrap text and the settings will be better. And between every column, if you will double click, the columns will expand and you will be able to read the figures of the given years. Now, for making the calculation in a better way and for making the presentation in the better way, it is necessary to arrange these years in ascending order. Right now, March 2025 is coming in the beginning. It should come in the last. Fine. So what I will do, I will copy these years one after the another so that they are in ascending order. So Control X, Control V. And while you cut a particular column, make sure that you're selecting it from the top where the name of the column is written. And you are also pasting it through top where the name of the column is written. For example, here I am clicking on B. I am not selecting the column manually. There is a reason behind that. Fine. So I will click on B on the top where the name of the column is written and I will press Ctrl X. And then I will select J and I will press Ctrl V. Once all columns are arranged in ascending order, then I will again cut all the columns and I will paste it in the very beginning so that it is against the particulars. I am unable to paste it because number of columns here are less and number of columns here are more. So I will first paste it here. Then I can transfer it with particulars. So in this way, you will be able to arrange your profit and loss account. So what we are doing today? We are calculating certain things. The first thing that we need to calculate is vertical common size profit and loss account. So I will write here vertical common size. Let me zoom a bit so that you are able to read it properly. After making calculations in respect to vertical common size profit and loss account, I will be calculating certain profitability margins as well. So two profitability margins I will calculate, and also I will try that in today's class only we also cover some leverage ratios that are necessary for decision making about the company. Fine. So let us first focus upon vertical common size profit and loss account. In vertical common size profit and loss account, I am interested in percentage of different expenses in terms of sales. So if you will scroll up, you can see income is given to you. Yes or no? Income is given to you. Then expenses are given to you. So all the expenses I will copy, Control C, and I will paste it here. So these are all the expenses that are given in profit and loss account. All these expenses need to be converted into percentage of sales. So what I will do, how I will convert it into percentage of sales, I will write equal to. Then the first expense is cost of material consumed. So equal to cost of material consumed. This is the expense. I will divide it with sales. So I will take revenue from operations net. You can see here it is written revenue from operations net. I will divide it by this figure and I will press enter. So this is what we are having. I will convert it into percentage and I will increase the number of decimal places. So cost of material consumed is 68.49% of the revenue. It is a big percentage. It means the company is more dependent upon the raw material. The maximum expense the company is doing is on the raw material. We will come to the conclusions later. Now, listen to me very carefully. I need to calculate this percentage for other expenses as well. So, what I can do, I can drag this. So, when I will drag this, there is an issue when I will drag this because you can see that it is B11. If you will see in the formula box, it is B11 upon B6. In B11, you can see this is what B11 is. Cost of material consumed is written. And we are dividing it by B6 in which revenue is written. But if we go to the next particular cell, it is becoming B12 upon B7. B12 is fine because B12 is the next expense. You can see here purchase of stock in trade. It is the next expense. But B7 is not fine. It means all these values need to be divided by B6. So in Excel, there is a way for that. What I will do that I will select B6 in the formula bar and I will press F4. So when I will press F4, you can see the change here is arising is dollar sign is associated before every command that I have given. Then I will press enter. And now when I will scroll down, this sales value, it will be fixed. You can see in every cell B6 is written. Fine. So this is how it is done. Now, this is for the first year, that is March 2021. I need to repeat this for every year. Now, what I can do, if I will scroll it down here, again, there is an issue that this B6 is fixed. This B6 is fixed. It means the sales of March 2021 is fixed. So I need to first remove it because every year expense need to be compared with its respective sale. I will remove the dollar sign and then I will drag it. Now, along with the expense, the sales will also move. So first apply the dollar sign, then remove the dollar sign. The application of dollar sign, you will scroll downwards. And by the removal of dollar sign, you will scroll rightwards. Fine. Now in every cost of material consumed, you are supposed to fix the denominator. So I will press F4, press enter. Again in March 2023, I will press F4 and I will press enter and I will repeat the same step. I will select every cell I will select the denominator in the formula bar. I will press F4 and I will press enter. Again, last cell, I will select the denominator, press F4 and then I will press enter. Then simply I will drag. So this is my vertical common size profit and loss account. This was the first thing that we need to do today. After you are done with this vertical common size profit and loss account, it is necessary that we calculate two more things. The one is profitability margins and another is some leverage ratios. So I'm writing here profitability margins. Next heading, profitability margins. Two profitability margins I think we can calculate here. Let us calculate one EBIT margin. And also let us calculate profit after tax margin. So we'll calculate two margins. Let me make it bold so that it appears as a heading. Now, for the purpose of calculating these two margins, it is necessary to divide two things. I'm writing the formula for reference here. So the formula is EBIT margins, that is equal to EBIT divided by revenue. Then the formula for profit margin simple. Profit after tax divided by revenue. PAT divided by revenue. So now you the formula. I think everyone will be able to apply it and find it for every year. So EBIT divided by revenue. Now there is a catch here. We need to have these two values for the purpose of calculating this margin. First value is EBIT. So I will scroll upward and try to find EBIT here. So EBIT is earnings before interest and tax. So let us see what is the first earnings that is given to you. Earnings and profit is one and the same thing. So this is profit and loss before tax. Let me highlight it so that you know where exactly I am. Profit and loss before tax is given to you. Then total expense is given to you. Then also profit and loss before exceptional and extraordinary item and tax. What I need? Earnings before interest, earnings before tax. What is EBIT? EBIT is earnings before interest and tax. So I need the profit before subtracting tax. I need the profit before subtracting interest. So is this the profit before subtracting tax? Yes, this is the profit before subtracting tax. That is 22908. But tell me, is earnings, these earnings are interest subtracted from it? Yes. So here you can see finance cost is written. So interest is already subtracted. Interest is already subtracted, but I need before interest. Yes or no? So I need to make this before interest. This is before tax. What I need is EBIT. Fine. What I need is EBIT, earnings before interest, before tax. It means earnings before subtracting interest and tax. Here I have earnings before subtracting tax. So let me add this interest again. Then I will have EBIT. So what I am doing, equal to bracket start. This is profit before tax. I am selecting it and I am adding back the amount of interest. Finance cost is your interest. Bracket close. Divided by revenue. Where is the revenue? Here is the revenue, that is revenue from operations net. I will divide by this and I will press enter. Let me convert it into percentage and increase up to 2 decimals. So when I will scroll it further, I will have the value of profitability margins for the period of 5 years. Similarly, I need to calculate PAT margins, that is profit after tax. So let me find profit after tax first. This is profit before tax. Once tax is subtracted, once tax is subtracted, the profit that I'm having is profit after tax. So let me highlight this. This is profit and loss after tax and before extraordinary item. So profit after tax divided by revenue. So I will apply the formula. It is quite simple. Equal to profit after tax divided by revenue. This is the revenue from operations net and I will press enter. I will convert it into percentage, increase up to 2 decimals and I will drag it further. So in this way, I am able to calculate profit after tax margins with the help of profit and loss account of Reliance Industries. All these values will be helping me to make decision about the company and to compare different companies. We will be doing that in last. So this is done. This we have done. The next thing that is required to be calculated here is some leverage ratios. Fine. So let us calculate some leverage ratios here. Leverage. So if you know, three kinds of leverages are there. One is degree of operating leverage, DOL. One is degree of financial leverage, DFL. One is degree of combined leverage, DCL. So for the application of all these leverages, it is necessary that we are aware of these formulas. So for reference, I will write formula for you and then we will do the calculation in respect to it. So degree of operating leverage is, I'm writing it here, equal to percentage change in EBIT divided by percentage change in sales. This is the formula for degree of operating leverage. Now we have degree of financial leverage. So you can write the formula for reference, then we will apply. Degree of financial leverage is EBIT divided by EBT. Degree of combined leverage is the multiplication of degree of operating leverage and degree of financial leverage. So I'm not writing the formula separately. I will just multiply these two things and then we will proceed further. So before I proceed, as we know that in this, we have already calculated EBIT. Yes or no in EBIT margin. So just for the sake of simplicity, I'm not making the formula complex. Let me calculate EBIT separately so that it is easy for you to apply it in the formula. So let me first calculate EBIT. So EBIT will be equal to, let me scroll upwards. So I have EBT, profit before tax. And if I add finance cost into it, I will have EBIT. Press enter. So this is the value of EBIT. And if I will scroll it further, I will have the EBIT of all the years. Now in the formula of degree of operating leverage, what I need is percentage change in EBIT. Okay. So let me insert one more row here and make it percentage change in EBIT. So it's quite simple. We cannot calculate the change in the first year. Fine. This is our first year. We cannot calculate the change. Change will be there from second year onwards. If you want, you can calculate it for March 2020 and then write it here. However, it is not needed right now. So I'm calculating the change here equal to bracket start, current value minus previous value divided by previous value, enter. So this is my percentage change in EBIT. And I also need percentage change in sales. So I will make one more column, one more, sorry, row, and I will calculate percentage change in sales equal to, not here because change will be there from second year onwards, equal to current sales minus previous sale divided by previous sale, bracket start, current sales. This is revenue from operation net. This is my current sale minus previous sales, bracket close, divided by previous sales, enter. And if I will scroll it further, I will have percentage change in sales. Now I think degree of operating leverage can be calculated equal to percentage change in EBIT divided by percentage change in sales, enter. Uh, I need to remove this percentage. Yes. So I have removed the percentage because degree of operating leverage is not in percentage. So here I am having the values of it. Let me again resize the columns. This is degree of operating leverage. Now let us calculate degree of financial leverage. EBIT upon EBT. It's quite simple. Equal to, this is the EBIT we have calculated divided by EBT is above. This is your EBT, profit before tax, earnings before tax, divided by EBT. This is your degree of financial leverage. You can reduce up to 2 decimal. Then degree of combined leverage. It is degree of operating leverage multiplied by degree of financial leverage equal to. Let us multiply these two rows. This is the degree of combined leverage. So this calculation we have done. Let me make this particular calculation a little bit eye pleasing. These are my profitability margins. Let me copy and paste these years so that it is easier for us to interpret the condition of the company. Fine. So these are the three things that we have calculated. Now, what you are supposed to do, you are supposed to make the graphs of it so that we can have a pictorial presentation of the same as well. So I will select the entire data. I will click on insert. I will click on charts. I will click on all charts. In column, I will click on this second chart and press OK. So here you can see yes, when you will increase the size of the chart, it will become more readable. So here you can see that this company Reliance, its maximum part of revenue is going into is going into cost of material consumed. So from this data, we can see that where the money that a company is earning from its revenue is actually going. We will have much more conclusions about the same. We will have much more conclusions. Fine. Let me plot other things as well on the graph quickly. Yes, these are the profitability margins. If you want, you can write it here as well so that it is easy for you to make Comparison, profitability margins. So this also, let me put aside. Then you have leverage. I don't want other things to be placed. Only the three leverage. Just for the sake of plotting, I am copy and pasting these values here. Otherwise, graphs will not be done. Fine, just for the sake of plotting the graph. So here you can see I have plotted the graph of leverage as well. We can rename this chart. And again, I'm putting it inside. So yes, all the things we have done. Now I will also show you a magic after this. This is not the all-time calculation that you are supposed to do. I will show you. So these are the three interpretations that we need to make. I will tell you about the company that what we can learn from all these figures. Now, first of all, we need to compare the two companies on the basis of all these parameters. So one more company we need. So what we will be doing, let me copy and paste the entire sheet. Yes, you can see I have copy and pasted the entire sheet. Now, what I can do, for example, if you want, we have the data of Reliance, right? And if I write Adani Enterprises Money Control and open its profit and loss account as well, and copy and paste its profit and loss account, make sure that you are copying it till this source. Why? I will tell you what's the reason behind it. In the next sheet, I'm copying it because first I need to arrange. Fine. First, I need to arrange this. So Control X, Control V, Control X, Control V, and then I will repeat the process for another columns as well. And now I will copy and paste this sheet, this profit and loss account in the sheet number 2. So all the formulas will get automatically applied if the particulars are same. All the diagrams will get changed. Yes, I was unable to copy the formula, so I'm changing on this sheet only. So I have copy and pasted. Let me show you again. So this was my old profit and loss account. So when I will copy the new profit and loss account, these value will change. So here you can see the revised value will appear. Cost of material consumed is 0% because this particular company is not having any cost of material consumed. The value is zero. So that's why it's 0%. So in this way, you can make data for multiple companies and compare them at the end for the purpose of decision making. Save this sheet. We will be using the same sheet to make further calculations in the future. So these are the results of Adani, and these are the results of Reliance. Fine, let me press Ctrl Z to get back at the previous results. That's all for today's lecture.